Back with the market right here on ET Now. Yesterday we got pretty close to even breaching that 19,500 print, which we did, and then saw a recovery coming in from there. Twice, in fact, we did reach that mark. This morning, though, the global picture is a lot better. You have seen a massive recovery coming in for US equity markets. And the GIFT Nifty implied open indicates a solid start for us. The 19,600 is the print in the green that we're going to start off the day with. Let's welcome on board Sanjiv Bhasin then and find out what his market opinion is. Sanjiv, hi, good morning. And it seems like it's going to be a good morning. Seems like the market is going to put all that's happening with the geopolitical tensions behind us and see a recovery today.
Yeah. Good morning, Aisha. So, yes, it seems to be a good morning. And like I said yesterday, the impact of that was really awesome, and very, very sad for the lives lost. But all happened over the weekend, and generally markets historically bottom out when bad news or the first guns are fired. I think this uncertainty over the oil and may continue. But like I said, the US markets have started to discount bad news, which means that any good news could now be a trigger on the upside, which was evident in the stock performance yesterday by the US indices. Along with that, the flight to safety means gold and fixed income will see a lot of money come in. That's why yields fell over 14 basis points, one of the sharpest decline, and so did the dollar. So I think that India is in a very much sweet spot, and that we should be very, very well guarded against anything on oil, given that the reserves and everything else seems to be in order. So I think that given the demographic premium, the results ongoing, no reason why we shouldn't test 20,000 in the month of October. So very bullish, and use this fear in the next few days to create a portfolio, because generally this is the time when most fear makes you buy stocks which you always desired to.
Okay, so let's create that portfolio, Sanjiv, for our viewers. What are the top 3 stocks that you think would become attractive buys?
So first of all, Aisha, Reliance has to fit the bill. I mean, the underperformance is down about 8% in the last 2 weeks. You are seeing that ADAI bought a 0.59% stake, which puts the valuation of Reliance Retail close to 9 lakh crore. And the total market cap at 15.5 lakh crore seems that oil to chemical business, Geo is getting discounted far too much. I can put my money on Reliance. I think if this market has to go back to 20,000, Reliance has to go to 2,600 and beyond. So I'm one heavyweight which I'm very bullish is Reliance. As a disclosure, we made some clients buy Reliance and Reliance Geo and HDFC Bank. The second stock which I like is AU Bank. AU Bank will come out with the strongest numbers we've seen, and I think that will be one of the leaders in the banking pack. The stock has done remarkably nothing over the last 2 weeks, and I think at 710 it gives you a very good risk opportunity of at least a 10% upside. Thirdly, I am very, very bullish on Tata Power, and I think that this correction closer to 248 to 250 is an entry point, given that they are now arguably the largest EV charging stations and the type of green power and the others on ultra mega projects. I think Tata Power seems to be in a very, very sweet spot. So these are 3 stocks, 1 large cap and 2 relatively mid cap stocks, which can outperform in the near to medium term.
It's quite interesting, that list coming in there. Tata Power, AU Small Finance and Reliance, which Sanjiv believes is a must-have in your portfolio. And you should be, treating the fear on the street as a buying opportunity for these names. So, Kunal, let's pick up on the charts of Reliance. Do you see current levels being a good entry point?
So, largely, yes, Aisha. I think current levels of 2,300 is a very good entry point for Reliance Industries. This makes the stock complete 2 important patterns on the technical front. One, of course, is the retracement towards its 200-day moving average. So I think the last 3 or 4 days, when the stock is just hovering around the 2,300 levels, it's also coinciding approximately with its 200-day moving average for Reliance Industries. On the other hand, 2300 on the historical front, I think 2300 and 2250 mark has been a historical support for Reliance Industries, specifically over the last two and a half odd years, from specifically from the 2021 end correction which started off in the markets. So I think that was a point where Reliance Industries took a lot of support at those points. So that could now act as a strong support zone. So when you look at the charts, the risk reward to enter the stock at current levels could be very attractive. The second way to look out for in terms of Reliance Industries charts is on the hourly charts or in the shortened time frame, where the stock is forming a consistent pattern of lower lows, but the RSIs are actually forming a pattern of higher lows. This, in classical terms, we call it as a bullish divergence. So even that should play positive for the stock price. So both in terms of the medium term charts, the positioning of the stock at 2,300 levels is a very attractive risk reward to enter.
Okay, let's also talk about some of the other names which are in focus this morning. And, you know, we were just flagging off that CLSA note coming in on Adani Ports. Sanjiv, do you think this fear on the street also could be a good entry point for the likes of Adani Ports, for instance? I think the stock fell a good 5% in trade yesterday. CLSA believes that, it's only a 2% drop in the overall SOTP of what Adani Ports, or rather what the Haifa port brings on the table for Adani Ports. And the region where the war is currently on, or the conflict is currently on, is far removed from Adani Ports operations.
Correct. And Aisha, when they bought this stake over there, it was a very, very marginal intake. It only gave them entry into the Strait of Hormuz, which is most used by people over a period of time for the cargo of oil. Now, all that got impacted, and sentimentally, even a 2% exposure meant that the stock corrected 5%. I would definitely think all the Adani stocks are a buy. We are very bullish as a disclosure on Adani Port and Ambuja Cement. We think some of parts, all the Adani plays are in monopolies, and they've raised enough capital now to shore up any problem going forward. Secondly, like you pointed out, generally these times are when most fear gets priced into the stocks, and even small exposures can highlight. From what I know, this is on the opposite side of where the real war is raging, and all people are discounting is that it could spread there. So there is always a little bit of uncertainty. But the management has morally guided that all their people and their workers are safe, and they are closely watching the situation. So I would definitely go with the CLSA note that this is a very good entry into Adani Ports.
Sanjiv, what's your thoughts when it comes to the entire pharma space? The latest note by Macquarie seems to be really advocating pharma stocks, the large cap names like Sun Pharma, Dr. Reddy's, etc. But given the kind of move that we've already seen, what's your outlook on pharma at the current juncture?
Yeah, so Aman, pharma has been a darling of a sector in the last 2 months, and most people had written it off after COVID and the likes. But I think the results and the under ownership, particularly of stocks like Oro Pharma and Lupin, which are two which we have actually accumulated as a disclosure. We think that the large cap pharma are a very, very comforting sign, given that IT still has some of the headwinds, whereas pharma as a proxy to a weak rupee and a stronger dollar becomes a very good alibi. And thirdly, the business is doing extremely well. So Aurobindo, Lupin and Sun Pharma on declines could be a very good basket. More than that, Avan, I would say that if you can't choose the stocks, better to do a SIP in the likes of a SBI or a Nippon fund. They have very good pharma funds which have got a basket of stocks. So an ETF over there would be a very good idea if you want exposure into pharma.
Okay, fair enough. That's the view coming in as to how you should really be approaching the entire pharma space. What about the outlook on banks then, Sanjiv? Just, some of the large cap names that have already gone through their spate of underperformance, given what the growth prospects are lined up, what the expectation is from earnings, is it a good time to buy?
Well, the whole undoing of the index has been Reliance and HDFC Bank. And HDFC Bank, when they came out with a statement, which was well known, that they will take time for the synergies of the mortgage and the merger to play out. But, on one hand, their deposit and their franchise and their growth on the credit side is the best we've seen in many, many months. And if I go by that, then I think the underperformance may be coming to a stalemate. Secondly, Aman, if we want the index to go higher, HDFC Bank has to participate. It has been the sole concern of HDFC Bank's underperformance that the bank Nifty corrected all the way from 46.5 to below 44. I think that is overdone. With this fall in yields and better credit, which we expect to expand faster than normal, I think HDFC Bank becomes a very good long-term and a slightly medium-term play. I don't rule out Bank Nifty going back to test 46,000 in this month itself. And there I would be very bullish on select banks like AU Bank, IDFC and RBL Bank, which are three banks where we are taking exposure and we think can outperform.
Bhasin Saab, how many stocks do you own? Because we've discussed 25 stocks already.
Nikunj, that's a broker in me. So if you are with IIFL Securities or you're following ET Swadesh, we'll give you a host of ideas or ET Now. And that's the beauty of the market. There are enough dishes on the, as Mr. Junjunwala said, there are enough dishes on the table. Choose what you want.
Well, choose what you want. Well, that's India for you. There's so many exciting things which are happening. And I just want to look at some of those AMS stocks. I was just thinking through it, yesterday. Keynes hit the market at 700 rupees. And today it is at 2,600 rupees. Let's look at the YTD change in Keynes technology. And it is like a vertical tower. It is up 2.5x. And we're still left with 1 quarter. Rarely stocks go up by 2-3 times in a matter of just 8-9 months. Then you got Shirma SGX. Shirma SGX, a similar kind of a movement. I think it went public closer to 300. It actually came below the offer price. Diwali, I think it went public and it just came below the offer price. And after that, it's just been a straight line move again for Shirma SGX. So there are these new cohorts which in a sense are getting created. Anything which is coming up on your screen, Nuresh, which could be a mid-cap, yet a new breed stock?
So out of these names, actually, none of them come up. This comes into that sector which has become a story. And the story could take a big pause. We are quoting at 10-15x sales, and these are no more small companies. They're 10, 15, 20,000 crore market cap companies. So that would be an avoid. I would prefer something safe, which is propping up on charts, which is basically the whole ratings sector one by one. So we've seen CARE ratings break out and do well. That was a stock which was up yesterday 10% even when the markets were down. So that's a sector which is slow and steady and now suddenly taking prominence. We saw the highest volume in a 6-month period for CARE. Then we are close to a new 52-week high, all-time high for CRISIL as well. So that stock looks very promising. That could be the next one which could break out going forward.
CRISIL, it's very interesting. We've actually not spoken about some of these, rating agencies. And the logic here, I think, is very simple. As India will grow, you will need more debt. So to raise debt, companies will have to get them rated. So whether it is CRISIL or whether it is, you got other more. CRISIL, I think, is a more prominent one in terms of in recall. But CARE, I think, is the other one which is a rating agency. They are not very big in terms of size, but that's the other one which is the other one where you get a little bit of optionality value. But since there is CRISIL and there is CARE and there is one more, it is just not coming on the back of my mind. There are 3-4 rating agencies in India.
Correct. And Nikunj, what people are missing is that it may be in early 24 that you get into the bond index, but the markets are looking very smart and they are pricing in some of the PSUs which have used debt on sovereign basis. So REC, PFC, NTPC are 3 names which come to light, and they already have an extremely good sovereign rating. And as you've seen, those stocks have moved up very sharply because the yields on their returns will fall, and they will be the ones which will be first off the index. Secondly, like you rightly pointed out, now will be the opportunity for a lot of companies to get their debt re-rated, their balance sheets in order, and for that, what better than the rating agencies, which will actually have their back office full of work, given that almost 30 billion is being committed or talked about coming into the JP Morgan Global Bond Index. And I think this was much overdue, which also tells us, Nikunj, that we are in an era where those widows' income of high yields will be passed. You will have to deal with much lower yields going forward, and that makes equity or SIPs very, very attractive over the longer term as an asset class.
Sanjeev, reports are also indicating that cement companies could report pretty strong growth in Q2. Going by what we've already witnessed, are you being very selective and are you penciling in healthy growth for cement?
Yes, Avan, cement will be a star sector given that construction activity and capex are at the highest I have seen in many, many years. So, the likes of Ultratech, ACC, Ambuja, they will be riding their way to laughing their way to the bank, given that the margins and the volumes will be high. And I think price increases, if I'm correct, steel prices have gone up by 8% in the last week. I think cement prices are heading higher. And thirdly, just the sheer weight of market, share which these three, four companies have. That's ACC, Ambuja combined, which come in the Adani packet, Ultratech and Dalmia Cement. I think is almost 58% of the entire market share. So as a disclosure, Ultratech, ACC, Ambuja are all three under our portfolio coverage. And we think that they are headed higher. Ultratech being the market leader will definitely see more traction on the upside.
Another stock which has done exceptionally well for itself, I think, is TVS. Then there is Tube Investments. Then there is, talk about some of the South stocks, Kunal. We don't talk about some of these Southern franchises, Sundaram Finance, TVS, Tube Investments. I may be missing one or two names here, Rane Madras, EID Parry. Look at the gains they've given in the last 5 years.
Yeah, Nikunj, and I think it's been a brilliant consistency. The consistency of these charts is the more important point over here, because rarely do we see that these stocks are amongst the top losers when the markets are going to a correction, but they are also not one of the best gainers in the market performances. What they do is more of a gradual performance on a day-to-day, on a week-to-week basis. So you may see these stocks rising up 10-15% in a matter of time. They don't. It doesn't happen flurry in terms of price action. I think that's the more stronger part. So when stocks scale up to new highs, we expect that the momentum should probably accelerate for many of these names. But the likes of TVS Motors, Tube Investments, Sundaram Finance, Chola, etc. These stocks have just gained consistency over the last so many months and over the last many years. And I think that's the bigger hallmark feature for these names.
Okay, fair enough. In the meantime, let's also get in a take as to some of the stocks that were abuzz in yesterday's trading day, despite the fact that the markets did come under pressure and the broader markets did see that spate of underperformance declining about 1.7%. You did have some names that did manage to light up the screen. For instance, you had a Delta Corp, which gained about 2.8%, ITI 11% on that counter, and even something like an Oil India. Naresh, I wonder what the charts indicate here.
So, say ITI has already moved up quite a bit over the last 1.5 months, breaking out of 130, going up to almost 215 to 20 by yesterday. So the risk reward is not great. Now it's become a stock where there will be a lot of announcements going forward. So Oil India is the one which looks interesting on a longer term chart. I've covered it before also. The stock has hit a new 52-week high and an all-time high on a dividend-adjusted basis. Was struggling around the 295-300 mark and waiting to break out. Yesterday was the breakout point. And the interesting part is it saw one of the largest volume days in the last 6-8 months. So Oil India looks interesting. Any fade off today closer to 295-300 should be a buying opportunity.
All right. Thanks so much then, Sanjeev, for taking time out and joining in. Good to get in all your stock recommendations right up on top of the show.